on Sierra.
Going.
For those that have Sierra, do let me know, and I'll pass it along
to you. Short,
I do not have one for Ninja Trader. Much more difficult to create there on Ninja.
All right, guys, we're going to jump.
But in Sierra, it's a breeze. Okay. You only have a blank screen.
Obviously, the counter trend rally that we're having. So we're going to get a look at the daily chart here.
Well, that's not
left
good.
Hand. And first thing that jumps out at me that I'm noticing here is that obviously
I see what I did wrong.
Counter trend rally and this big rounded top, right? So obviously there's a trend line here that we.
All right, hold on a second. Let's do this then. Let me.
Although I'm not a big fan of these trend lines at this steep of a slope.
I'm sorry.
But I do think that it's
restart the whole. See, this is the production.
A good visual to have on
the whole
the chart
friggin'
for right
production.
now.
Hold on a second. I think it's easy, huh? All right.
Let's save this.
1 second. Let me just reestablish this.
Here. Yes.
Actually,
let me get that up on the board there.
Stuff on the chart.
Yes.
Okay, PTG main room.
Yeah, I don't like to look at it. All right, so the first thing that pops out at me is that obviously we're here. We're testing. We're back testing the 200-day moving average, right? This is the 200-day moving average right here in pink, and this is the exponential 200 moving average. So it's kind of moves a little bit faster than the simple.
I'm gonna have to fire my production manager.
But more importantly, we're also back testing the much faster 20-period moving average. And on the daily chart, I think this one matters, especially for trend continuation.
All right, let's
when the 20-period moving average holds on the daily, you typically have a strong trend.
Fun, right?
See it coming up here.
All right, take two.
And it's also been holding as resistance on the way coming down. So we can see
good
that
morning once again.
The faster 9-period cross below the 20 has kind of been acting as resistance all the way down.
Trade strategy briefing.
Okay.
NFA compliance rule 2-29C subparagraph 1
right here. So we have
the risk
since the cross
with trading.
We have this little violation here. But then we got back below.
Let's start with the bigger picture.
I'm not giving this too much weight
since it is April 1st.
One day, and then we immediately close right back below.
It's always good to
And
review.
the next day,
as you may have recalled, we've been talking about
Canada's
throughout
really the 3, 4,
January,
5
February, and March.
20-period moving average.
We've been talking about
as resistance.
The onset of more distribution in terms of the trade activity. Kind of a la Wyckoff.
Your guess is as good as mine, but it's there until it's not.
So what does that mean? It means that on the down days, we're seeing greater amounts of volume on the down sessions versus the retracement of bounces in the up session. So you can see this pretty clearly on the on the volume here.
You can see I have this. This is a 4-hour chart.
Heavy downside volume.
Yesterday we noted that
further weakness, and eventually we got that break of the pivots here.
I kind of been mentioning that in order to see an hourly trend change, what we wanted to see
further weakness,
price get above 66.80.
Again, even before
everything that was happening
right here, overseas,
and that
market was in a
price
period
got over
of distribution. Market we can get above that
these prior lows
area cleanly. All right, so again, that's the daily picture, and then when we bring it down, okay, getting a little bit more granular.
This was our gap down.
One thing I like to know.
This was our war gap down. Once we reclaimed it, we kind of had this counter trend rally. It's held us for 2 more times, and then it gave us
swing. So what we're really doing is we're measuring.
What happened then? We made a new lower
similar swings. So we're taking the swing here, for instance. This would be one a prominent swing.
This was the 20 period moving average.
You can clearly see the down move was occurring.
Moving average on the 4
and then
hour.
what we're looking to do is measure the
and we got new lows
swings in the same direction, right? So what is that swing? That swing is from a low to a high. And then if you come back over here, although this was happened in one day,
first need to get over this band here.
Usually
this
doesn't
band,
happen in one day.
Is this band acting as a
this
first
swing
touch
here
fade, and then price is
is
just
the
going,
same
is going to come in here,
as
make a higher
or
low,
similar to
and then come up
the prior
again
swings.
and
Everybody see
retest the
that?
6680s.
So that's symmetry, similarity in life. This is
4-hour
swing.
trend.
Now take a
trend
look at
change.
this
I
last
think
one
that's what we
here,
need to be on the lookout
the
for
swing
today.
that we're currently
But
in.
being a
So if
trend
we were to measure
follower,
that,
This one's just
again,
I'm never going
and
to
very similar right
the
up to
low
that
or
50
the high,
week
but I am going to
average.
stick to the.
You
And the
can
bulls
do
have a lot
this.
of work to do.
No.
Okay,
Is this a
thank
good
you.
place for a lower
Let's
high?
see these.
Well,
Savage, Mr.
just
We
Savage.
still
noted that on the
Now,
daily,
one thing you could do, you
moving
could,
average is
I like to
acting as
just
a
simply,
resistance.
you know, kind of
Yeah, we just
draw a
tagged that
line,
today.
right? So I would do like this. This is how I typically do it. I'll draw a line high to low, right? Very simple. And then what I'll do is I take that
The
line.
other thing I
and
want
then
to point out
copy
here is that if you draw a
and
fib
move
from
it.
the all-time high,
Okay. There you
7041,
go. Boom, and
down
copy and move
to
it.
our most recent low,
again.
6353,
Okay, and just
That
measure
is
from low to
correct.
high. So there you go. So that's very simple to do. You don't have, I mean, you can use the Fibonacci tool,
7043 was
all
the
right,
high.
the retracement tool if you want
Down
to
to our
get super
63.53
accurate, right?
quarter
You go high to
low.
low, but then
Price
you would
is now
still need
testing
to,
the 38.2%
move it
retracement
or
of that
copy
move
move.
down. So we have
right? So these
shallow
are some of the ways you can
resistance.
do it. Copy move again.
We are still in a
if you need
downtrend.
to.
We have shallow resistance. We have resistance on the daily, and we have
Okay, but
resistance on the
for my
hourly in the form
purposes,
of a
you
Fibonacci,
know, I'm just simply
as well as a moving average.
drawing a line and then copying the line. It's easier, faster. It's just
The
as
big tell
effective.
right here is if price is going to
Right.
take
So what do we
over
have here?
the
So we have
6680
three
for the-
symmetries, swings. So the swings, the
Okay.
symmetrical
So
swings
coming
are
into today, what do we
retracement
have?
swings, right? So we have the down move, and then we have retracement swing,
Overnight
down
inventory
move,
is
retracement
100%
swing, down move, retracement
long,
swing,
right? Because
So
here on the left, on the right chart,
in
we
my
can see that
experience,
settlement was
typically
65,
retracements
67.
tend
Our overnight
to,
high made it as high as 66.43. And up
potentially
until
anyways,
maybe an hour ago,
right? One,
you could
the
say that it was
downtrend is still
100%
well in effect,
net long.
but it's going to be the
However,
next
over the last
reaction to
hour,
price,
you can see that
how
we've
the next
taken a
kind
lot
of
of that
stage
back.
in the swing
So what do we have on deck for today?
Okay, here's the
unfolds will be,
stats.
I think, a little bit
We're
more
going
of
to
a
keep it
tell.
simple, right? So
going
do we
up
get
and
a
forward, right?
look above
Now,
and
again,
fail
Trump speaking,
and a return
So
into range?
The
price
I
March
guess
comes
tonight
over
at 9
here,
o'clock to the
tests
nation,
the
March
overnight
close,
high,
conflict.
close was down 5.9%.
So of course,
right?
anything can
We
happen.
look above
And,
and then we
there.
roll over and come
But
back
barring,
come back
you know,
down
close
to
was
trying
down
to
test
figure out what
yesterday's
that's going
high,
to,
value area high
how
for a
that's
gap
going to
fill.
affect the market. In
I
terms
think
of
that the
overall
gap,
structure,
gap rules are in
Right.
play, and gap rules state that
what I'm
we
looking
need to
for
go with
next,
12 gaps that don't
again, all
fill.
things considered and equal, I'm looking for this low.
Much
which
of that
is,
is much of that has been
80,
worked off.
85.
We're really close to
Carry that forward
Yeah,
here.
we're down
a gap fill at 65,
So
80.
80, 85.
Yesterday's high.
on the year.
If we would get
this
some
first
sort of
quarter.
What's going to be
retracement,
really important for
You
me
guys
today is
recall
what
a
is our
couple days.
opening
Remember,
print,
I hope
and where
you-
is that
and then
opening
we-
we're
print
looking for this to
Remember,
in
be
I
a
said
relation
new
that-
to
buy.
yesterday's
that
range?
if this was a down
So
quarter,
do we
I thought
open
that
and
would
finish
be
yesterday's
kind of a
range below
normal
yesterday's high, and
Remember
we
that,
remove the gap
reaction
fill,
if the market
and the gap,
does
and there
that.
is no gap?
And that's what
Well,
I'm
That
looking
to me
for
wouldn't
here.
be a
I'm looking for
very
this level to find some support.
that wouldn't be very
If
bullish
that
to me, right?
happens,
That meant
right,
that,
so
that would tell me that all these overnight
if
positions,
that happens,
all these overnight
right,
longs
there's a good chance that we
just
get a
ran
little
into
bit more of a
overnight
that
significant
worked
or
out that way.
sustained,
liquidated.
I think we're gonna. I'm
And
gonna
either
figure
balancing,
out what
Following that, I would be
eventually
looking
to
at
move higher.
where we come down into yesterday's range.
some
That
degree,
was,
again, over a period of time.
You know,
Obviously, this is
we'll
gonna
we'll
be
look
kind of
later on
the
this
April
morning
month.
at what I'm gonna
Maybe
expect.
come up here and
eventually
test that
working
area
its way.
high, and if,
Again,
if
this
we
is all
can
going to
get it
be
to stick,
predicated
and,
off of what oil does, what's happening in the
we'll go
conflict.
if
from
Wolves
there,
can get
right?
this to
That-
stick,
that
then we
really-
come down
one
here, we
is
test
right where the
yesterday's
numbers-
high at
this level
65.83,
That's
test
pretty-
the set, or even a little bit deeper
Yes,
to test the
getting
settlement and get a true gap
And
fill.
that's, if you notice,
That's
this
why
is
And
the
price gets
50-day
immediately
and the
rejected, and we
50
move higher, we
week
start
moving
building
average
and
right in
developing
there.
higher value.
Look where prices stop so far over
Then
that.
it's game on to the upside, right? Then we'll be looking for something like this, where we
That's
pull
where we
back to
are.
yesterday's
Down in the
high,
quarter.
So
value
that to me
high,
is going to be
settlement
significant
and
on
hold,
a
and we
larger
can start looking for
degree basis.
longs
So
to
something
target the
to carry
overnight high.
forward in your, you know, in the thought process,
Now we are
right? As the market
However,
unfolds,
if we
again, this is a
open
240-minute chart,
Ichimoku.
right? Take that, you can drill it down into your 60
If we open
minute,
gapped up, with
all right,
assuming
all the
that
way
we
down,
open right
but
where we
that's
are
why I
right
wanted
now,
to, since we start,
Yeah,
the
minimum,
price comes
just-
into
I-
it's always
yesterday's
good to
range,
kind of
have to
take a
do
broader look
a shit
at
ton of work, but I'm
the
so
action
close to getting
trades
this
through
all
the
and to
open,
see
well
kind of
through
that
the settlement,
30,000 foot
and through overnight low.
It's gonna be like
viewpoint.
clockwork.
So from
Then I'd
I'm
be
looking
looking for
for
trend
a granular
continuation
now
to the downside,
I
in the
tore
or
overnight.
it
maybe
up
an
in
entry
last week
on a
because I
back
had this
test of
Yes.
a
meeting
settlement
Okay.
on
So
yesterday's high.
the D level money box again.
Now you
You'll
remember
see
that
there,
I think
again,
I
our line of
yesterday
the
when I
sand
was on with
pretty much
Bo,
right.
Anyway,
85.
and Monday,
the market
Thursday,
moved above
last week,
85s, which it did.
we're
I
expecting
Overnight,
noted that
again, with the market closing
last
strong
week,
yesterday, we were
the kind of
looking
the
for a
context was
spillover
that
to the
we would see
upside.
early
We
morning
got that spillover to the
strength
upside.
followed by
All
mid
right,
to late day
exceeded the money
weakness.
box, and look where we
Well,
stopped.
we didn't get that yesterday. We got quite the
Exceeded
opposite.
D-level, rather, right? And look
We
where we
had
stopped and reversed.
Early morning
Right up,
strength
right up the
Here's
money
the
box.
ES.
and
I cannot
trend
make this
We're
stuff up,
still
continuation.
under
everyone.
the cloud
But was
now.
that trend
40, but
continuation
we're back up
really
into this
strong?
range where it's been.
I guess if you look
So
at
there
it
you
from
go.
this
This is gonna be
perspective,
Right, we're
important.
back
On the
down
weekly
here.
chart,
So
we can close back
what
up
we
we'll
had
be
positive.
looking
we
for
had
now,
rallied
the weekly.
going forward into
over
I think
100
really
points.
our
Much
TA
of that was
session,
on news,
what we're going to be looking for,
right?
to
Much of
try
that
a
was on the
high
12:30
here,
news when we had that
right?
massive
Is
60-point
this
spike,
does this become a buy
and then we kind
response
of
area, right? Or
just
does
drifted
it
higher
fail
for the
Yeah,
rest of the day.
and become
And
a
that
sell?
was continued in the overnight session.
We shall see together.
This is a thin cloud.
But again, we would
If
anticipate
you get back up above
this
this
to
cloud,
become
right
a
now,
buy.
it's
Times are
480, I
expected
think
if
that
structure,
15
if
minutes,
the bulls want to
9 to
maintain
21.
that
240
dominance
right
at
at
the
the
top
Now
top.
we're back. We're back.
Should the
we're
market kind
testing
of
that
come
from
back
below.
Push a
down
little bit
below
higher.
that, again, the next challenge.
All right,
will
so
be
going into
overnight
today,
lows to the
do we
closing
get
area,
a gap
and that,
fill
of course, will
You're
be a
definitely
secondary
turn back up.
challenge
I really think
for the
that
bulls.
where we test
might have
where
been
we
low.
test
It was
the
almost
yesterday's
what was
high.
the initial
The
Uh,
opening print is
assumption
going to be
is
really important here
on a challenge?
because if
that
we
the
open,
first
say we open at
challenge gets
66.05,
accepted,
we trade a
right,
little
or
bit
in this
higher,
case
we roll over and we
rejected,
come down here and we
right,
test yesterday's high, value
Right.
area high,
Right.
Down to the
opens deeper the
120s.
settlement,
Not a
and we
prediction,
wick like
just
we did yesterday.
laying
Remember,
out
yesterday we were
potential
looking
scenarios.
for a
Same
long
story.
trade
Oh,
from
we
the
got
11 o'clock hour
did
All
get
right,
a
that's
cross
skinny
right
on the
low.
mini.
down
We
here
were looking
between
for a
those
long
That will be
trade
joining Manny up in
that got
the room
rejected
today.
from the prior day's
That's
range
positive.
and value.
This,
And we
this
got that
return.
right
So
at
let me,
Let's go back here.
a
Manny
little bit
did
after
his
11.
Work up
Exactly at
in the
11
room
o'clock, we
earlier.
got the first spike.
So I want to
We
make
flagged,
sure
and
that
then we took out
he
the high
complete
on
what
the
he
news.
had to do.
So that was rejected from the prior
And,
day's range
right
and
now,
value,
on
and
in
we
there.
brought higher
49%.
prices,
Share my
and we
chart
established
as
higher
well.
value. So now we have
In the ES.
one day
But,
of higher
right
value
now,
established.
For us,
And
I'm somewhat neutral here. Again, you got
Right
while
now,
Walker
running into this supply,
right here. So start
So it
off
might
kind of
not
a
fill.
neutral, and then we'll take it from there.
I think we have to be mindful of where we're running into, right? So we're running into the daily 21 period moving average
ATR zones
resistance.
here.
We have a supply
And
zone
then we'll
from the
take it from
war.
there. Anybody have any
The
questions,
war long
comments?
that was
Again, always feel free to
support,
post.
and now it's acting
we'll
as
take it from there.
resistance. So
All
let's
right, let me
look
see if I
out for
can-
what happens here on our opening
50,
print,
54
Join up.
Canada
right?
manufacturing
I think we have an
from
opening print
one.
somewhere around 6607,
Sec.
6606 quarter. So do we spike up? And right now we're testing the 9 and the 21 period moving average. Okay, so let's take a. We're going to keep an eye on the internals, but if we trade back through the open, right? Let's look for value area high, yesterday's high, gap fill, right? And see if we get a gap fill in a reversal, or are these higher prices rejected? Do we get, and it kind of makes sense that we would get
Let me just.
when you take into the account the overnight inventory.
Okay.
So let's
I'm
look
just
out
trying
to
share
make sure
here.
that we
Hold on a second,
see if we get some
please.
support, yesterday's high, value area high,
Inflation
and then we can look for trend continuation higher and target the overnight high. If we come back into yesterday, if we get below value area high and yesterday's high, test the settlement, and then the settlement acts as resistance. And then yesterday's high and value area high act as resistance, right? Then we can assume that
Oh, alrighty
that
then.
these higher time frame
Oh, wait a minute.
resistance supply zones
I got the wrong
held.
room on.
and we look for trend continuation down to the downside, maybe targeting the overnight low
that
first,
is on.
and then we could target the pullback low from yesterday after yesterday's news spike,
Player
which
refreshing.
is roughly
to Manny.
Player refreshing.
65.31.
Player refreshed.
847, 857.
Again, gap rules are in place here, though, so go with all gaps that don't fill early. Thus far, as we're opening, it's not really a super momentous move higher, but it is holding the gap for now. Let's keep an eye on the open. The opening print was 66.06 quarter. Maintaining above that, target is the overnight high, 66.43 quarter. If we reverse through the open, then we're looking at testing value area high, yesterday's high, and the
listening
settlement.
to Manny in the other room.
If
right
that
here.
does not act like support, then I think
Let
that we
him,
can try to sell a pullback in here and look for a move down
Morning
to the
brief.
overnight low and also to test that 65.20 pullback low.
And everybody have charts and video okay here in the
Yeah, I
PTG
think that makes
room?
sense.
We're good? All right. Thank you. Thank you. All right, super. All right, I'm going to be toggling back and forth between rooms. I'll say,
Hey, good morning, David. How are you?
Good. All right. So joining up with everybody, I'm now broadcasting in both rooms.
Yeah. Okay. Okay, good. I think that kind of makes sense, right? I'm not sure if you heard what I my opening thoughts, but
I heard partial of it.
yeah. So we have gap rules in play here. So go with all gaps that don't fill early, and we kind of are already seeing a move higher off the open, right? So we opened at 66.06 quarter. We're now trading 66.19. Okay, targeting the overnight high. Now, do we get a look above and fail? Not sure, but okay. So that's what I have, David. Sorry, didn't mean to run on there.
No, all good. No, all
just
good.
Just reviewing my thinking going into it.
Yeah, no, that's fine. I didn't want to interrupt you. We did our quick early briefing in the other room, so I didn't want to interfere with what you were doing. But essentially, you know, probably in the same wavelength there. Again, we had strength overnight spillover from yesterday's close, and it already hit some of the upper targets that we have. The D-level money box area. I'll just quickly show that on this other chart coming up on the left-hand side. All right, and you can see here, this is our D-level money box zone. So that already hit. We got a nice response off of that, right back, all right, to where we currently are. My thoughts are, anyways, is that any retest of the prior high, you know, we're looking for some sort of a defense there by the bulls. We'll see there. If it fails, again, it can, you know, go into that category of, you know, pushing lower, and then the next level would be the prior close for another challenge. But if this holds, I think what you said, you come back and retest the overnight highs. So that's obviously part of our scenario as well. So we'll kind of see where we are. Right now, we're leaning long. You can see on our charts here, we have markets prices above the VWAP here, all right, the Whopper as we call it, all right. So above the Whopper, and we had a nice little early discount, which is one of our core setups, all right, for those grabbing that. And now we're just kind of leaning to the long side for the time being, all right. So that's that, and then we'll switch back to our other setups here, and you can see on the top left, again, we have, this is an A4. Okay, that triggered, and we're in already there scaling. We have an A10 down below that did trigger as well. That was a short first target is tagged, but we're struggling on the balance here. So it's kind of going in different directions at the moment, but both are working out pretty well for the most part. So what we'll do is we'll manage the one on the left. All right. Again, we typically just put that blue line here that you see on our charts, by the way, right? That's what's called our theoretical average. What a theoretical average is when you enter a trade, right? That's essentially your cost. And then as you scale, right, your theoretical cost or your average cost of your entire position moves away. So it gets wider, right? So in other words, your stop can be around that theoretical average level. And that's basically kind of a core break even, automatically break even type level. So that's already auto generates on our charts for us. Um, so that's kind of what we do there. Right. So I'm going to just kind of move the stop down on the on the A10 short because we're kind of in conflict here. Yeah, there you go. All right. So I stopped out on the balance of that A10. Again, the momentum still seems to be pretty favorable for the long side momentum. So we'll stay with that for the time being. And there you go on the A4, just scaled out of that one. And we'll just move our stop to break even. So that's kind of where we are on our charts here and what's happening. And we'll take it from there. Now we'll just simply manage that last one on the top left, the one on the bottom left there, the short. Essentially a scratch, maybe a small loss on that, but not a big deal. The one on the top left will take care of that easily. And that's kind of the lean for us early as we start. So hopefully that's in alignment with what you were saying, Manny. I didn't want to go contrary to what didn't want to go contrary to what you might have been saying to you on your during your brief.
No worries. And you know what? Yeah, I think if you did have something that was contrary to what I was saying, I don't necessarily see that as a bad thing.
Yeah.
I mean, like, point out when if I'm missing something, I want that's why I want to hear about it. I want to know, what am I missing? How did I get that wrong? But like we were talking about offline, David, the other day, I think that sticking to kind of a really pragmatic approach, in that using the day time frame references, because they always work, they always make sense, and it's really something that that I use every day in my trading, and I think it can really help people frame their day.
Yeah, no, definitely agree on that. All right. All right. Very good. Very good. All right. So what we're doing is just kind of hanging out, managing our A4 long trade there. And there's really nothing further to work on at this stage. So being very patient. Um, all right.
Yep. Let me just.
And if anybody has any questions or comments, always, feel free to post.
Hey guys, real quick, remember, let's keep an eye on that opening print, 6606 quarter. Real quick on the internals, right? We have 1.8 to 1 positive on the NYSE, 2.2 to 1 positive on the NASDAQ. The Russell's ripping higher. It's approaching its overnight high. So that's looking good there. Oil's come off quite a bit. It was at 101 just a bit ago. Now it's down to 98.50. So that's good for risk, right? That's good for risk assets. Can't believe oil is trading normally up there. Okay. All right. let's take a look at what we have on the sector list. Try to get a good idea for. All right, so the VIX is opening slightly gap down, right? That's good for higher prices. We have 1, 2, 3, 4, 5, 6, 7 sectors green, 3 red. Now we have 8 sectors green and 3 red. So that kind of lines up with our gap here. Thus far, no real strong attempt to fill the gap. And let me just point something else out here if I can get it to show. Okay. Somewhat of a reversal there. Watch the opening print, guys. Watch the opening print. I think my CCI got stopped out. Okay. Yep, it sure did. Fine with that.
First pullback, take trade.
All right, guys, we're back through the open now. So look out. All right, gap fill is what we need to stay alert for here. We just traded right back down through the open, right? So we tested higher. We could not test the overnight high. So that's not really that strong. So first thing we have to think of here is, okay, we're going to see a correction of that overnight inventory. And the next destination would be yesterday's high, value area high. I have this wrong. Value area high. David, do you have value area high for yesterday? I have it as 83, 82, 75. Okay. Now,
Yeah, hi, let me just take a quick check. Do you want RTH or full session?
RTH.
So here's the RTH session.
It's probably
Okay,
the high of
so-
the day, right?
Well, it looks as though it's around 40. Oh, wait a minute. Value area high. There we go. 65.83 it says.
Yep. I've started putting these value area and these lines on this thinkorswim chart just for people watching.
Yeah.
But man, I've been using value areas for such a long time now, guys, that I can just basically like eye it up on the chart. Like I can just see on a 15-minute chart where the volume was and where the time spent was.
Yeah.
Just like I'm sure you can probably see it too, David, and probably see where the single prints are if you dial into a 1-minute chart.
Yeah, this is the profile chart that I use, and it actually automatically tells us here. So VAH, value area high. This is the full session now from yesterday. Wait a minute. 1 second. No, wrong one. Here we go. Yeah, 65.83 value area high. 64.84 on the value low, and the point of control yesterday, full session 71.50. Okay, so that's that. And what this profile does is I split the sessions. So I have the Asia session here, and then I have the Euro session split. So it's kind of nice to see the rotation from the prior RTH session into Asia. I don't trade these sessions, but it's good to know, how that unfolds. So you can see what's nice is, yesterday's close was Asia's low value area. And then you can see the high value area as Euro opened and it started trading, it maintained consistency with Asia's value, and it kind of overlapped there. So now here we enter into RTH, All right. Again, looking at Euro session, we're pretty much right where Euro closed. Right. So, and today for us, I mentioned it in the other room, but for today to us, today's a cycle day 2. So yesterday, cycle day 1 was a rally. So today we're kind of looking for, what we call MATD, or market or morning after trend day, which is typically we're looking for this kind of two-way rotation, somewhat more of a balancing type play instead of but into the RTH, we're kind of, looking to establish kind of a two-way balancing. That's the interpretation of what we're looking for. So we're not looking to necessarily just keep jamming them to the upside, but rather, looking for areas to stall and then reverse back and then find, buyers at lower levels. So some of those lower levels would be, the Asia value, right? Euro value area. So that's around the 90, 95-ish area. Right. And of course, the prior high and all the other ones respective that we've talked about already, the close. Right. So all these things will be, I call them challenges. Right. So prices come down to challenge that area. Obviously, question mark on what would happen, but we would be looking for responses. And if that doesn't unfold that way, then, obviously market is beginning to tell us something perhaps different than what we anticipated. But and I mentioned in our daily trade strategy, I categorize, they're your perma bulls, perma bears out there, and you know who they are. So maybe some of you here are already perma bears and perma bulls. I like to say that what we do in our group and how we're like perma flexible. We just want to kind of just go with the flow, shift as necessary, and not digging our heels. Have a scenarios laid out, but not digging our heels where market must do something. It's going to do whatever it wants. So we need to be flexible to respond to what Mr. Market is showing us. So and then last thing, just while we're talking here, I just happened to notice it, but we got a shift here. We were long earlier on our A4. Now we got a shift to the short side as the market kind of shifted back down here, and we already got a few scales out of it. So we'll make our adjustments accordingly. And that's it. So just trying to be flexible to see what Mr. Market has in store for us. Again, areas that, like we were talking about the values. So this is your developing lower value down here on the 90s. So again, you kind of anticipate some sort of response in that area. You can see here, get slightly above the value. You're talking about look above and look below and fail. You can do the exact same thing, when you're referencing a level such as the value high or value low. A lot of times, you'll see here kind of popped above the value high, right? And if we're looking for two-sided rotation, we're looking for that potentially to fail, right? So that would be your look above, right, and fail, or our famous PKB type trade, right? So again, you can do that against any level. It doesn't necessarily have to be the daily high or low. Any core reference level would work just fine. So something to keep in mind. We call that a dynamic PKB versus just referencing the prior highs and lows on the PKB style look above, look below. All right. So all right, and that's what we have right now. I got to stop in place at the prior high. 3 scales already on that A4, so we're good to go there. And nothing further at this stage. So just managing that and continuing to observe and orient the action. But our anticipation, since being cycle day 2, would be more for kind of a rotational back and forth.
First pullback, take trade.
All right. So we'll just be patient with everything.
All right, guys, real quick, just to want to highlight. So on the clock time study that's posted in the chat, it's on the screen here on my left-hand side. So today's S3H. I have the cycle day wrong. I usually get this from David, and I thought today was cycle day 1. It's actually cycle day 2. So scratch that, make that a cycle day 2, but we're expecting an AM high followed by a low into the 11 o'clock hour. I'm going to do a live workshop. I wanted to jump on yesterday and do it, and I kind of got wrapped up with some other stuff in the afternoon, but I want to point it out in real time so that you guys can kind of get an idea for it before we go into the workshop. Okay. And, you know, I took some snapshots of the last few days and how it works so that I can use as a visual reference. I'm pretty sure that everybody's busy trading, right? But I can just show you here. I think this was yesterday, how it works. I will continue to point out the levels. The times and the expectations and the nuances of it in anticipation of that workshop. When things slow down a bit, I'll discuss it a little bit more in detail. You know, for me, guys, I just consider it to be it's true edge. It's not the easiest thing to figure out. Being straightforward, it took me about a year, and I'm so glad it took me about a year to learn it. But I am beyond happy that I did take the time out to learn it. And it probably would have taken me. I probably could have picked it up a little bit earlier had I not given up on it early on. But I also didn't have someone that was actively teaching it. I was kind of going at it on my own. Okay.
Yeah, Manny, I'm looking to where you're talking about the clock. I'm looking to learn in more detail about that. Perhaps instead of doing it during trading hours, I know it's difficult otherwise, but maybe at some point set some time aside, maybe in a slower portion of the afternoon, not so much the morning, because that's the busiest time of day, but maybe in an afternoon session, have a short workshop or it may need a few different workshops, part 1, part 2 type of thing, because there's a lot to unpack with that. I know that for sure.
For sure. Yeah, David. So in actuality, at today's meeting, that's one of the things we're going to lay out is a 3-part live stream to discuss those. And the reason why I haven't announced it yet is, if you can see on my screen now, I've been collecting every day type, and I'm building up because I've never grabbed these visuals. So I needed these visuals in order to be able to show it and to teach it. So you can see here, I have the day type and then how the day unfolded on each of these. And that's going to be a big part of how I am able to show it in hindsight. So, I only have, let's see, there are total 8 days in the series. And thus far, I've accrued what I need on 6 of them. So I only have 2 more days left to show those examples of those days. So pretty close to announcing that. Yeah, I'm pretty excited about that because, I'm excited to share it because I know that if you guys get out of it what I've gotten out of it, it will help you. It helped me tremendously with the cadence of my trades, right? I'm looking for trades at certain times of the day. And just ask yourself, if you had, we have edge and price and indicators and so on, right? But if you had edge in terms of knowing when the probability is higher to enter, right? So we use, tick, delta, and so on, and those real-time tools. At least I do for my to time my entries to make sure that, hey, if I get in, hope I don't want to take too much heat on this trade. Best trades are the ones that we enter and they immediately go our way. But so if you have a tool that would give you somewhat of an edge as to what time frame would be better to enter your trade, if you knew that waiting a half an hour to enter your trade, you probably have a higher probability of not having to sit through some chop or some unrealized drawdown. That would be that's of great value. So look out for that. It's coming soon. Like I said, I have 2 more days to collect the visuals on, and then once I have those, then it's just a question of finding the right day to schedule it, and we're going to move forward with scheduling it. We're going to talk to the guys today at our meeting about scheduling that out. All right, let's take a look at the internals. We have oils coming off somewhat. Oil's become like the new internal. 1.3 to 1 positive on the NYSE, 1.8 to 1 positive on the NASDAQ. Our ticks are somewhat neutral here, just hovering right between, in the positive zone. We have some slight negative ticks, but nothing really to hang your hat on. Oil is off its highs. The VIX has filled its gap. And if oil breaks that, if oil can get below that 98 level, I think we can, then we can start thinking about a test of the overnight high. And oil is trading right now 98.89. So let's see if we gain some traction right here. Some traction to the downside. But thus far, you can see how every stab higher on the Russell, the NASDAQ, even on ES has wicked, right? So there are attempts to drive prices higher. And thus far, those have been rejected. The idea here that we want to maintain, right, is that since we traded right back down through the open, we're going to start maintaining. We'll see what happens once we get to yesterday's high gap fill. But this is really choppy, guys. Be careful out there. I mean, so I have a general rule that I follow. So on a 15-minute time frame, if that first 15-minute print is a doji, I'm sitting and I'm waiting, and I can't tell you how often that has saved me just unnecessary chop, right? So we had our first 15-minute print was a doji, and then the following one has been largely inside that doji, right? So we've gone nowhere since the open. We have our high up at 66.28 and our low down at 65.98, right? So that's a 30-point range of nothing. Now, depending on what size your account is, right, that could be, what looks like a blip on this chart. If you're trading the mini and say you're trading a $50,000 prop account, I mean, you can get shredded. You can fail your evaluation or even blow out your funded account before the open. I mean, before the first half an hour hit. So just be cautious out there. We don't have a direction yet. The gap is holding, but we've tested now. We've gone below the open several times. Let me just see how many times. That's a good question, right? Yeah, it's acting as support now. The opening print is acting as short-term support here. Again, we're looking for that early high pivot into 10 or 1030, opening the daily open. We've tested below it and we've rallied above it. I mean, we only, even on a 1 minute chart, we only closed about 3 bars down below it. So, and you can see that after 952, it's just been acting as support. So, I guess that, you know, gap rules are in play here. We're going with all gaps that don't fill. And the earlier scenario that we discussed in the pre-market open seems to be in play here. Let's see. I don't know. I'm used to a 15-minute. So we're going with all gaps that don't fill, and we're targeting the overnight high. We're back above the open. Prices below it was obviously rejected. We have a time study that's looking for an AM high somewhere between 10:15 and 10:45. Let's see if we can, if the bulls can mount a charge and test that overnight high. I think decisions will be made there in terms of the trend. Remember that we have these higher time frame resistances, right? So on the daily, we have the 20 period moving average that's acting as resistance, the 200-day exponential acting as resistance right now after the open. We also have the gap down on the March 8th gap down that was support. It acted as support once, twice, 3 times. Then we lost it. And now this is the second test from below. When we tested it the last time, this was the news pop though. This was, so heads up about this, right? So this pop right here, that was the Truth Social post. So just giving you some color and some context on that. This area is resistance until it isn't. Until we get something like this where price comes up here, test back down, and then we get a test of that 6680 to 66 to 6800 level that we've been talking about, that would signal an hourly trend change. But it's at least from on my work, it's really important to stick with this hourly trend no matter what I think. See, I'm a trend trader, right? So I'm never gonna get in at the bottom, right? I'm never gonna, you know, I make my living in the middle, right? So I'm never getting in down here. I'm not gonna nail this. I'm not gonna nail this. I'm not gonna nail any of those, right? But sticking with this downtrend has paid nicely. Sticking with the trend, not overthinking it, you know, not looking for counter trends in the opposite direction. I mean, there's big money voting on lower prices, right? There's big money getting out of the market. So let's just stay aligned with those guys. Price having a hard time getting any traction in any direction here. We're back down to test the open again, guys. You know, we pointed out we keep wicking on the NASDAQ and the ES. So just be careful in here. Aside from what the auto trade assistant is executing for me, I've not pointed and clicked and done anything. Still looking for a test of that overnight high at 66.43. I'm just going over my trade plan here. So we had support at 66.22 to 26 and 66.12 to 16. I really like the 65.92 to 96 area because that kind of lines up with the back test of that hourly area for a counter trend long. Remember that 6,600 was really important. On the way coming down, 6,600 was really important. There were days, I mean, this is a 4-hour chart. Look how much, let me just mark that level here. But let's stay with the trend. Let's stick with the gap rules here, making sure that if we stay with the momentum, and although we're wicking and prices having a hard time gaining any traction to the upside, if this was really bearish, and you guys know, you've seen the way ES sells, if it was bearish, we would have already been filled the gap, tested yesterday's high, and been back in yesterday's range. Not saying that it's bullish, but it's more neutral than anything else. Internals are slightly positive still, 1.3 to 1 positive on the NYSE, 1.8 to 1 positive on the NASDAQ. Let's take a look at the sector list. Okay, so the VIX came and filled its gap and now rolled over. It held the early high. So that's good for higher prices. Our sector list is now more neutral than anything else. We had 7 to 3 positive. Now we have 1, 2, 3, 4, 5, 6 positive, and 1, 2, 3, 4, 5 negative. And more importantly, the weighted AD is now going red. You can see that right down here. So, yeah, again, it's just, those are not screaming higher. Price is struggling to go higher. From the open, the weighted AD is telling us that it's neutral to negative. Cumulative ticks are slightly green, but I mean, that's nothing to be crazy about. None to drive us crazy about. No conviction there. Again, price is chopping around, wicking. Don't get chopped up in this, guys. Wait for it. Wait for it. It will break out, and there will be something of quality here. There always is. Back down to test the open. And we're struggling at this resistance area. This kind of makes sense, right? This hourly resistance area. It does make sense. At least we know why we're here and what the challenge is, right? We're stuck between this hourly, what was support, now resistance, the 200 period moving average, and the 21 on the daily. We're struggling between that and maintaining the gap. Heads up, we have, oh, okay. Dang it. We had ISM at 10. I missed it. In terms of order flow, our high at 66.2850. There's no read there. In terms of the ATAs, we have an A10 setting up on a test of 66.25. We'll see if that triggers. I had an A4 that triggered and went from 66.07 to 66.15. So that was a nice little win there. Yeah, we're still chopping around up here. What do you guys think? Do you guys think that we're going to go tag the overnight high, 66.43, or are we looking at a retest of yesterday's high at 65.83?
Well, to answer your question on my end, Manny, I'm a coin flip on that one at this stage.
Right.
Right. You know, whether we test the overnight high or not. You know, as I was just mentioning in the other room while you were speaking, you know, again, I'm paying kind of closer attention to the value high here. You know, what happens against that area? Do we get another pop and fail, right? Or clear and convert? If we get a clear and convert, all right. So what it means for those that are in the pit room not understanding, we're looking to clear that level and hold it above it on any, subsequent retrace. So that, to me, that's called clear and convert, CNC, that we just simply, and if that can hold there, then the, again, odds begin to favor, going to test overnight high up above. Right now, it doesn't, it's making some attempts to get through that level, but appears to be failing to garner any sustained bid. So we're kind of just snapping right back into the middle. So at this point, we've gotten responses around VWAP area. So that kind of, this is what I refer to as our, if we're going to narrow it down a little bit, this is our sandbox, VWAP to value high. And that's where the majority of action is being placed right now. Again, the idea would be is we push down below VWAP and then we fail to recover, reclaim VWAP area, right? Then I think odds favor to come, lower and retest those lower levels to some point. So that's kind of what I'm looking for right now. There's no real evidence of any of that at the moment. We're just kind of chopping back and forth. And I was mentioning in the other room about trading ranges. When we have a tight range like this, it's not as easy. So most of us here are just waiting for, some sort of directional, push. But the odds, again, the odds right here are just kind of sitting on our hands at the moment.
Yep, I think that's the right call. For sure.
Also, you had mentioned something about, when you get some auto trades that clip off, okay? A lot of those auto trades, when somebody's doing an auto trade system, they do, it's different than, uh, you know, analyzing the market in real time and forming an opinion of the market. When we do auto traders, like we use a lot of auto traders here, and you've pre-programmed the auto X to trigger off of specific structures. It knows nothing about what the current kind of a rhythm of the market is. It's just basically, this is what you told me to signal, I'm signaling it. So all of that work on those auto X's go into the development of it and testing and so forth. But when you do auto X's, you gotta, you may be saying, oh, I think the market's going to go down, but it hits a level and it triggers a long, and then the long pays. Now, it's just doing its job, what you know designed how it to do. I mean, that's with any of the auto X systems that we've developed, and so it doesn't take into consideration any opinions, right? So, and I always get the questions like, well, shouldn't that have been triggered short if we're looking for shorts? It's going to trigger based upon the structure that it's been told to identify, right? So, what we can do with that is if you have if the lean is long, then you can design the auto X. You can instruct the auto X to only take longs, and it'll bypass a potential short setup. So if that's how, again, that it's all, and turns out to be the end user, how the end user wants to enable it and use it under whatever the conditions. So it's still, there is some discretionary decisions about how to use it, but once you've enabled it, it's just going to do its job as it's designed. So sometimes it appears to be in conflict with, maybe the underlying rhythms in the market. But, and that's why whether you're, you a 100% discretionary trader, making your own decisions, enters, targets, etc., or are you, 100% a mechanical trader where you're letting, an auto X system do it, or you, what I consider myself anyways, is more of a hybrid trader. So kind of a discretionary with computer assistance. All right. So, there's all different ways, but sometimes when you'll see an auto X on your system there, Manny, trigger off, and it kind of seemed, I would not would have taken that trade. And then obviously then if the trade works, it's like, okay, it works. You know, it can be in conflict, and a lot of traders kind of they screws up with their head, you know, many times. So, you know, I always say, you know, use what kind of agrees with your style, and if you want to be, you know, fully mechanical, then use it. If you want to be, you know, I don't use it 100%, you know, but I do follow the signals, and I make my assessments, you know, accordingly. So sometimes actually you can even get a more favorable entry price, just waiting for the signal as opposed to taking it in an auto fashion. You can actually, in most cases, get a more favorable price waiting kind of a few bars, and then it would have triggered at X price, and then it pulls back, and you actually can still enter a valid trade, but even at a better price. So, um, so there's you know, double-edged sword to auto X systems.
Yeah, and you know what? That's a good point, David. There's multiple ways to get this done, and I think I'm a pretty good example of that. In that I have my daily setups that I trade, but I also run the ATA in the background. And often, you're right. Like there have been times where I've kind of outthought myself out of, where I'm bullish, and I'll put the auto trade assistant on long onlys, and I kind of worked my way out of a good short trade that it would have executed. So I've learned to kind of, to trust it and to manage it more loosely in terms of letting it execute based on the structure as it was designed, and then managing more the risk in terms of when I want it to execute or when I just want to turn it off. Like, okay, I'm done for the day. I've had a couple of good trades there. I'm going to turn it off. I don't want to risk any more, and that's what's worked best for me.
Yeah, another way you can approach it as well, is using an auto X, you know, the ATA, to say, okay, I want it to trigger, however it's going to trigger. Let me just trigger into one contract, you know, and maybe you're looking for, you know, a position size, say, of, you know, 3 or more, but you don't want to be all in, because obviously you're at max risk once you're all in. So a lot of times what I like to do is turn it on, put on one contract, and then, you know, if it turns out to be, you know, a false start, then I'm out on one contract. I'm not out on a full position.
Hmm.
But if it starts holding, you know, in the direction, and like I said just a few minutes ago, you know, many times you can get even a better price than the auto entry. So you could say, okay, auto triggered at, you know, X price. It's still holding. It's actually a little bit at a better price. Maybe I'll add one now manually, and then, you know, work it that way, kind of work into a position, but you'd want it to execute, you know, to kind of the execution of one contract is more of a prompting that, hey, wake up, here's a signal that you know, you told me to identify. Here's a signal, I'm identifying it, and I'm triggering into it. Then from that point on, you can make the assessment of whether or not, you know, you want to add additional contract, you know, size to that position. So that's another way of approaching it, because again, the auto X's that I've designed here are not, they're in most cases they're all in, you know, and scale out. So, you know, there's a different ways, right? All in, scale out, all in, all out, scale in, scale out. The scale in, scale out, is much more tougher to program. It can be done, but it's much more complex. So just all in and scale out is a more direct. But again, if you're all in at risk too. All right,
Right.
versus scaling out. But if you enter on one, and then you're paying close attention to the activity around that signal, it's easy for yourself to just, you know, add to the position, you know, or maybe it scales out of one, it comes back, and you're able to then kind of rescale in, you know, kind of work around a position. So there's a lot of different ways to approach using more of a hybrid approach, truly managed. Couple things: trade selection and how much we're putting at risk. Whether the trade works or not, that's up to Mr. Market. So I got to be focusing on, what I'm in control of. All right. Coming up to the initial balance, first hourly high low. A lot of the big institutional players, mark that range and then take additional, action from there. We'll see. Right now, it's more balancing, which is very much typical of a cycle day 2, which we're on, following kind of that trend up move yesterday, directional move up. So continuation would be as we look at above the value high right now, developing value high, and then any new weakness coming in, it would have to be below VWAP, and that with some sustained activity below VWAP to kind of shift that. Not much more.
Yeah,
April 1st, we're getting fooled.
These I'm just looking at the 15-minute, and I have to say that these are the type of opens and the type of days, right, that scare me. And not because I get hurt on them anymore, but just I probably have some mild PTSD from just getting so chopped up at the open and price didn't go anywhere, and it's it's 9:45, 10 o'clock, and I'm 5 trades into the day and price didn't go anywhere. And I just in my trading career, I've flagged that this is probably the environment where I've been hurt the most and is most risky for me is a open, because see, it's like at least for me, the nature of the open, you hear the opening bell, you've got your plan, you're well rested, and you kind of you have your lessons that you want to apply and your analysis and your plan for the day, and then that opening bell rings and it's kind of like, all right, let's go, I'm ready to execute. And then you run into a day like this where it's just chopping around, it's chopping about, and you end up taking more trades than you'd like, or more. And so for me, it's having that first 15-minute doji rule has saved me so much grief, and just put me in a more peaceful mindset. It's like, okay, first, and I've even dialed it down. Like I'll use sometimes I'm in anticipation of that first 15-minute print. I'll just look at the 5, and if the 5 is a doji, then of course, then the 15th is going to be a doji, right? And then I get a next 5-minute print, and that one's inside. Like, all right, well, the 15-minute is probably going to be a doji. I'm laying off of this. And simple linear decision, right? 5-minute doji, no fly zone, and I'll just wait until we get some directional movement. And in that time frame, it allows me to sit here with a clear mind, assess the price action, and not have the clutter of overthinking a bad position that I took because I was anticipating something off the open.
Yeah, to your point also, I think most all traders, if not all traders, perhaps 99.9%, we're all kind of AAA personalities. We want to be in control. We're ready to go, out of the gate. And so, in many cases, you kind of have to temper your enthusiasm and wait for the proper signals. It's hard, very, very difficult. It's definitely not an easy sled on that, because we want to get something going on the tape. And but if you have if you've researched your setups and what the frequency of them are, then you need to respect that, no matter how eager you are. I mean, this, you can take a look at this. You can have a trade, every 30 seconds. I mean, is that your plan? Is that your style? And again, it's up to the individual for that. But you know, if you're super scalping, you're actually subjecting yourself. You're competing right there, you know, on the same level of the algos. And I don't find that's a winning formula, right? My own personal, I've tried it, not a winning formula. Um, but you can use the structure and the you know strength of the algos to stay, you know, in alignment and saying, okay, I'm going to buy that dip, you know, to a level. And you know, and again, you can do a lot of probes that are not necessarily, you know, core positions, but you know, say, hey, you know, that level's holding. All right, it gets there, I'm going to probe one, and then you know, pops up 3 or 4 points. Okay, I'll sell 3 or 4 points on one. I mean, little probes. A lot of that also, and again, if you have it designed into your plan, you're not breaking any rules. It's part of your plan. It's like, okay, I'm taking a segment of my plan and I need to probe a little bit to kind of get the feel and the rhythm. And also what that also does, and you can do that in simulation mode too. It doesn't have to be with real money, because what you're doing there is you you have so much pent up energy and you're ready to go and you're enthused about, you know, getting in on the trades, that you need to kind of release some of that energy. And sometimes, you know, just, you know, either doing, you know, small probes while you're waiting for your core setup, can help relieve some of that energy. But again, that's something that you also need to control in your overall, you know, trade plan. And you know, as opposed to you're sitting there and you're waiting and you're waiting and you're waiting and you're waiting and you have all this, you know, you're ready to go, and you see, you know, in your case you're using the 15 minute. If it's a doji, you're gonna say, okay, the rule is I got to sit on my hands. Okay, you know, then you have to sit on your hands if that's what you found, you know, to be the best course of action for yourself. Not easy, and that's the whole point. And here's the thing: when you do research, you know, it's very easy. You can go back and you know, oh, I'm going to look at the past 10 days a week, and you just kind of move that chart quickly, right? And you know, and it's not real time. You can fast forward. Well, in real time, you're sitting there and it's real time, and it's can be arduous sitting there waiting for a setup, you know, because I saw all these setups of the past week. Now, when I'm looking for that same setup structure, and you're just going to be, you know, it's like slow motion during the day versus when you're doing research, you know, off hours and you're moving your chart, you know, fairly quickly to find setups and structures and identifying patterns and so forth. And then, you know, you feel good about that and you come all excited, and then you're starting to do it in real time and you're like, it's just, you know, it's like slow motion. As fast as the market goes, it's like, yeah, you know, Magister says so true. And so again, you got to be able to temper your enthusiasm a bit. You know, what was that comedy show? Curb Your Enthusiasm.
Oh yeah.
You got to curb your enthusiasm a little bit.
I think the
Just
main
kind of
character's name was David also. Wasn't it?
bring it into reality.
Yeah.
Not
That's
easy.
a good point. Yep.
Not
So guys,
easy at all.
I just noticed that the VIX made a new low, but equities were unable to kind of breach their recent highs. So just to keep just a data point to be mindful of. And oil is definitely can breach that 98 level. So now we're starting to move a little bit lower. And for me, the idea here is now that we're at the 1030 mark, we have to start looking for that high pivot. So yeah, that's the way I'm seeing it here. Just letting this play out. It's so choppy. It's an hour in, and we haven't been able to gain any traction in any direction. So on the 15-minute, we also have a bearish outside bar. So that's bearish outside print. So just be mind, just another data point, right? So VIX broke to new lows. Equities were unable to have a correlated movement above their highs. Oil could not get below the 98 level, and it's wicked twice on the 15-minute from that level.
First pullback, take trade.
And we just keep bouncing off of that opening print. There goes another test, and it was rejected again. So much of the same. Much of the same here. Let's take a look at some of the equities. So Microsoft is flat, Apple is flat, Nvidia, it's up about 1%. Tesla's up 2%. Bitcoin's up almost 1%. The 10-year is up just under 0.25%. Gold is up 2%. What else we have? Let's see. What is there going on in the world of equities? Take a look at the sector list. 1, 2, 3, 4, 5, 6, 7 green. 1, 2, 3, 4 red. So we haven't really moved out of this.
Take trade.
All right. Hey, heads up, 1,000 tick on the ticks. So stay alert here. That final rejection of the opening print, that recent rejection of the opening print is something to be aware of.
First pullback, take trade.
Yep, price went higher and immediately got rejected, guys. So I think that was the final one. VIX made a new high and stabbed lower. Man, this is really choppy. Yeah, for sure, Rev. This is just it's been an hour and we're doing the same thing. Just remember, guys, just zoom out a little bit here on the hourly. Let's take a look at, I like to zoom out to the 2-hour. Again, we're bumping our head up against the 6,600 band, the 6,600 resistance. And, we're staying up here. So that kind of hints to we're forming some acceptance, and that would signal higher prices. So maybe this is just a scenario where the bulls are just chewing through that overhead supply that we're seeing here at the 21 period moving average on the daily and the 200 exponential on the daily. This 6,600 band is, we need to assume that we need to understand that it's not going to, it's not going to go easy, especially since we've just rallied 300, just under 300 points. Yeah, 300 points. 300-point rally. Again, I think that if you stay with the go with all gaps that don't fill, I think that's the right play here. If you're a little bit more longer, higher time frame focused, I think that if you've any bulls from yesterday's session, even from the overnight session, yesterday's overnight session, not the day before, prior day, not yesterday, the prior day overnight session. All of those longs have not been liquidated, right? You can see here the overnight sessions in light gray. So we've basically been bullish since, what was this? 8:15 on. Basically, we've been bullish since 8:15 on Monday, 8:15 p.m. Eastern time. Any longs after that have been safe, right? All these guys from 63, 50 are sitting pretty. They're not even their positions aren't even threatened with a gap fill here. Thus far, price was unable to test yesterday's high. It couldn't even get through the open. So, I think we're going to see higher prices. I think you have to keep your eye on that overnight high. I think decisions will be made there. Whether or not we get a look above and fail, or we get trend continuation. This 15-minute print right now that's developing right now. I mean, it was a bearish outside print just a few minutes ago. Shit, man, that's choppy. Let's see what the ATAs are doing. Nothing on the ATA front for me. Yeah. $10.44. Let's see how the 15-minute prints. Our ticks have remained mostly above the zero line. We just had that extreme tick at 1,000. And while that's typically like a short-term fade, more importantly, it's not how high the tick went and it did that mark a high, but the way I like to look at it is how low the ticks are not going, right? Barely any prints below the zero line. So while this is really, really choppy, I think you just got to stay on the long side. You got to go with the gap, as we said earlier. Hopefully that keeps everybody on the right side of this.
What you can also do, Peter, is, in the settings, okay, on the ATR, all the ATRs, but we'll take a look at the 4, right? So on the 4, in the settings here, there's a setting called extend lines at break, and you can choose how many extended lines you want. I'm just going to do one, the most recent. Okay, so if you do the most recent, take a look at my screen. Yeah, take a look at my screen. So what this means when there's a break, I call it the breakpoint line, right? That's actually where the level where the ATR was broken, the ATR. But that's not the price. The price actually was up here that was far enough away that triggered the shift of the ATR. Does everybody see that? All right. But what you can do is you can use that. Okay. And again, the way it works here is it extends it out into the future. All right. So that is actually the break point, right, level of the ATR. So when we get a pullback here, okay, you'll see here's your current ATR, right? Here's your current ATR line right up here. But it went below that current ATR line. Okay, everybody see that? So in many cases, not all, but again, use it as a reference. In many cases, it will actually come back to the what I call the break point. All right, break point. So that's the extended line. So if you have those on there, and again, I would only recommend having one on there. If you put up too many, it gets really messy. But the most recent break point, because that's going to be the one that's going to be most important. So if you put a break point up line like there on it, you can use that as reference. Hey, it didn't stop right at the ATR. No, it went below, but it went into the prior break points, right? So that's actually the level where the ATR shifted, although the price had to be up here to effectuate that shift. All right, so you don't want to go chasing at that price because that's not actually where the ATR shifted, not at that upper price point, but rather the breakpoint line. So that breakpoint line can be used, right, as in this case would be a buy, the ATR buy level even, right? So experiment with that. See what that brings to you. Again, another function of the ATR that you can set up, right, where you can identify the zone. And again, in this case here, you kind of got it down into the breakpoint zone, right? And then you get a discount. So you get that pivot back up. So again, all these things just add to the mix in your decision point. Yeah. Yeah, so Peter says he knows about it. Okay. Also in the range, you can expect Thor to be passed through level. Yeah, well, that's the thing. Again, you can add. Peter showed his A7. Okay. Let me see if this is the A7. I think this is the A7. That's A4. All right. So let me put A7 up here. So if you put A7, like what Peter's saying, I think you have A6 on there, don't you? Oh no, you have A7. Okay. So a lot of times what will happen is you have a little faster chart. That's right. Right. But a lot of times what will happen is if it breaks down through A7 or A4, right, you want to look at A7 as the next level, okay, for a response. So you can certainly look, at that level as well. All right. So kind of multiple tiered ATRs, to help you. All right, I'm going to take a short break and I'll be back in a few minutes.
New lows on the VIX, guys. I think we're getting that VIX bleed here. Still looking for that AM high. We are in the tail end of that window now. But thus far, hey, sorry about that, Madge. I just saw your post. Sorry to hear that, bud. You'll get them. It's a lot. Plenty of hours left in the day here. You'll be fine. Let's figure out how we can how we can get that back for you. Yep. Yeah. Okay. Good. 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 Glad to hear that you're in the right mindset. That's the way you want to. It's so weird how sometimes I'm like I think I mentioned it yesterday. I have a buddy who's super successful in what he does, and he wants to learn how to trade. And I've been coaching him, and we've been trading. He's the one that I'm frequently chatting with here on WhatsApp and on my phone, and he pops in here into the pit. But he doesn't post. That's right. I'm talking to you. But anyhow, so I'm coaching him, and he's not. He like I said, he's pretty successful in what he does, but he tends to go on tilt. And a commonality that I find is trading attracts high achievers, go getters, and frequently, when you come into trading and you kind of carry that success you've had in other areas of your life, and then you're faced with an endeavor that entails having to be okay. I got the final ATA, final exit on that CCI long that I had there, so that's nice. So when you find success in other areas of life, and then you start looking, you're like, all right, so I can trade well. I'm a pretty successful person. I'm a responsible person. I can follow the rules. But one thing that's underestimated is how much failure you have to deal with. So if you're not comfortable with failure and able to shrug it off, it's gonna be challenging, because you have to be able to take a loss and understand the law of large numbers, right? So to understand that, hey, okay, out of 50 trades, I need 25 to be, whatever your system dictates, I need 25 trades to be profitable in order for this system to make money. You can't get beat down or too down on yourself when you might take 25 losses in a row and the system still work. But it's that amount of failure that's hard for people. It was hard for me. And the reason for that I think is tied strongly to behavioral economics, right? Like so when money's at stake and we have and there's loss of money, it's not like losing a game, a card game, or losing a game of, I don't know, take your pick, baseball, football, whatever your game is, pool. It's different when money's on the line, right? Because it's an immediate either validation or invalidation of what we perceive to be, are we intelligent, savvy enough to get this done? And that's not really, helpful in trading. You have to be able to take a trade, let the system play out, and then move on to the next one. Easier said than done, but that's what it requires. Right. Good. Yep. I can agree with you more, Madge. Yep. I agree with you. Just that's a really good point. That it harkens in. When you're probably successful because you've gotten to that success because you're part of that success was being able to control your environment. And here, you're in an environment where you have to relinquish control. Once you press that button and you're in, you have no control. So it gets a little bit more difficult. And dealing with the failure is not easy, right? I mean, we all can admit it, right? Nobody likes to lose. Even if you tell me that over 10 trades, I'm going to make $100,000 over the course of 10 trades with a 50% loss rate. I'm still going to have a hard time dealing with those 5 losses. I mean, at least I used to. And I'm not gonna act like some trading genius or guru that got over it easily. I had to do a shit ton of work to get over it. If I wanted to succeed at this, I had to rewire my thinking. I did some work with Dr. Andrew Menaker. If any of you want to look him up, I did some work with him. I was also really, really into meditating for a long time. That really helped out a lot. I don't practice as much anymore, but the process of learning it really put me in a really good, calm place where I could shrink my focus and just focus on staying really present and focus on what's in front of me. And that's really valuable because you can, you can get down about a loss early in the day, but who knows how that day will end up. However, if you carry that early loss and you get down about it, well, you're certainly not gonna. You likely won't trade any better. That's the truth. I'm sure we all know that, right? That's why tilt days happen. Yeah, you need to have the temperance of a monk, the constitution of a monk. You have to be able to just shrink your focus, stay super dialed in to what is directly in front of you. And if you're looking at the charts and analyzing data and you're still thinking about the last trade, or you're trying to formulate some thought or some prediction in order to make that feeling feel better, you're going to miss something in the moment. I guarantee you're going to miss something. You're not going to have the clarity of mind to make a good decision. Yeah, or it could be that it was that trade was the outcome of an edge that didn't work, right? No edges are 100%. I mean, I often think about my days back when I was working, when I'm not sure if I shared this with you guys, but I worked for a really long time. I worked at Bloomberg. I that's where I got my introduction into the market. So I worked at Bloomberg for just about a decade. And so I started off in their analytics department. That's kind of where I get my analytical mind from. I learned how to analyze markets. I learned how to use their tools to analyze markets and help hedge funds and banks use the tools in order to analyze markets, right? And then I shifted over to their trade book department, and there I was assisting traders that were using Bloomberg in order to execute their strategies. So that was my exposure into trading. And one of the things that I learned there was, hang on a second, guys, time out. Give me a sec here, guys. Still moving higher, headed toward that overnight high, guys. Okay. All right. Sorry, I forgot. Sorry, I just had to blow out a quick fire. Put out a quick fire. All right, still moving higher here, looking good. If you're long, so thus far, guys, you know, the objective is not for me to sit here and talk to you about my time at Bloomberg and how that framed my trading, but more importantly is to try to add value to your trading, keep you on the right side of the market, and I hope that we're doing that. Yep,
Yeah,
we are, David.
good stuff. Good stuff, Manny. I'm back. I had to go take a break.
Cool.
We have audio there?
Yes, we do. In fact,
Okay,
now that you're back, tag, I'm gonna take a quick break. I'll be right back.
All right, cool.
I have to use the restroom.
All right, guys, I'm back with you for a bit. Everybody have audio in PTG and PIT? Okay, thanks. All right. Yeah, we get that breakout we were looking for above the value area high. So now odds at least favor a retest of the overnight high, and then possibly further range expansion beyond that. So we'll take a look at what that how that unfolds here. So here's your 60-minute on the left. Again, just kind of overnight early action. So we're going to need to get above those 43s, 45s, and then we can get some expansion. So all good. Price holding above the prior high as we were briefed. We were leaning to the long side as well in our early briefing. So it is unfolding nicely, as a matter of fact. So that's good. NASDAQ broke up already. Yeah. So good. So, cycle day 2, some consolidation, some back and forth, some balancing, and then above the value high, trying to get a little bit of range expansion beyond that. And again, a retest of the overnight high is not a foregone conclusion, but that would be an objective. Now, at this point, as we were outlining earlier, we were looking for one of the scenarios was a CNC, right? A clear and convert. So we did convert, cleared it and converted. So now if there's any subsequent pullback here, okay, this is where we would want to be looking for a renewed buy response against that value area high. Okay, so not a foregone conclusion, but just really a scenario if it were to unfold that way. And then we would be looking for a pullback in here for an opportunity to establish a long. If you're not already long from the earlier discount that's showing up on the screen, but if you weren't, or if you're not, then there is an opportunity potential for another long on a pullback. So the whole idea is just staying in alignment, waiting for the market, identifying levels, on a pullback, what would be a good level, right? We already talked about this pullback to the ATR value areas. Staying in alignment. So it's all about just staying in alignment. I mean, and just being patient. So, all right, cool. The earlier video that I recorded has been rendered, but I have not uploaded it to the website yet. So I'll get to that shortly.
Thanks, David. Internals are still pretty much where they've been all day. But we are still headed for the overnight high, which has been our target since we noted that the opening print held. And that's the thing, guys. I don't think that, I don't think we have to say that this is not a trade signal calling service. I don't think anybody's looking for that. I mean, quite frankly, I think that to tell someone, if I told anyone, hey, buy here and sell it there, I think I'd be insulted, right? Like, I think everyone wants to execute their plan. I think that everyone wants to fish on their own. I mean, and why would anyone follow someone else's, why would you risk money on what some person is on their analysis, or what they, or what they think? Ultimately, the decision is yours. But our, at least my point is, and I take it very seriously, I go back and I review the days that I was on stream, and I look to see if what I said early on kept us on the right side of the day, right? Or what I was spewing, was it erroneous? Did it just put us on the wrong side? And pretty much, we've been able to achieve that goal and keep us on the right side of things. And from there, at least we have a good idea on how to execute. And like so a good statement that I've stole from David that he constantly uses is, stay in alignment with the dominant forces. I love that statement. That's what we're trying to achieve here. And, for the most part, you see the ATAs, you can see those on your screen. They've been trading it long and getting paid on that. And the opening held, the open print held, and we're now approaching 3 or 4 points away from the overnight high. See if we get a continuation over that. Now, there was a piece of data that was posted in the IM Pro room yesterday that I think mattered. And it was just a large to buy where deltas were going to be neutralized over a certain price. And I think that price was 65.50 SPX. And thus, we opened gap up, and I think that's why it couldn't go lower. Market makers were just neutralizing and buying futures and driving prices higher.
Hey, Manny, let me just step in for in the pit room here for a second. You mentioned something about the ATA, the auto trade assistant there, running off trades and automatically. When you're doing an auto trade, remember, as I mentioned earlier, the auto trades are specific criteria that all the conditions must be true before it triggers. Now, in many cases, that is not always going to be the case. Not every signal is going to have, the 100% complement of criteria that's going to be valid in order to take a trade, right? But that's how, when you're using any automation, you have to tell it, this is what I want you to do, right? So there are other trades, similar setups that trigger or signal rather. And again, to Manny's point, we're not really a signal calling service, but again, I've created signals in our own methodology and toolbox here to help us identify structures that we're more interested in taking. And so that's what I've done. And what I wanted to show here, particularly those in the pit room, is that on our screens here, you'll see, again, we have two core categories. One, it's called a discount, right? And the other one is called a premium. So in its core sense, the discount is a long pullback in an uptrending condition. So let's talk about that one, because we have two signals here. So you can see that on our main chart here, we have obviously a move higher, and we get a pullback. right? And then it continued to move higher. So that pullback here generated a signal based upon our oscillator down below. And on here, you can see to the right where there's a text there called discount. Okay. So that signal down here, that is what we refer to as an event, right? So the price pulled down, the oscillator went to this discount zone. And again, a discount and an uptrend is a long signal. So it generates the signal in real time. There is no delay, in real time right on the screen. Now, this one, the signal generated, it is valid, the criteria for an auto execution of that signal was not. There was some criteria within the context of the auto trade assistant that did not trigger that as an auto trade. All right. But that does not mean that the signal is invalid because it was not auto X'd. Right. It just means one of the subcomponents in the in the ATA was not valid. So but that is a valid signal. The subsequent one here, all right, also mathematically they're exactly the same, all right, algorithmically there. And again, that one did not set off an auto X, but again, does not mean that that's invalid. It just did not meet the full criteria of an auto X, component, right, subcomponent. So, the auto X is very helpful. It will, when everything is in alignment as it, per the coding, it will trigger. But again, like I said earlier, a lot of what we try to do here is, that we can use that auto X, but it's not, you don't have to just wait for an auto X. Right. The idea of what we teach in the method and so forth here, the whole structure is what were the signals? So these signals, and again, I think a lot of folks here, by the way, I mean, like to trade manually. Like I said, most everybody's a AAA personality for the most part. They want to feel as though they're in control. They want to be in control. Okay. And again, that's what what I'm about. I want to be in control. When I drive with my wife says, "Oh, let me drive." I said, "No, you're not driving," because I want to be in control.
Same.
I get actually quite nervous when I'm sitting in the passenger side.
Oh, I'm a terrible passenger.
Yeah, I'm a terrible passenger. I really, I'm looking, she hates it when I'm in the passenger seat.
Oh,
Right?
yeah.
She really does. So,
Same,
and I hate it as well. So the solution for us very simple: let me drive all the time. So I think that's the case for many traders. But the idea is, though the auto execution, can be helpful, it's not the end of the it's not the whole story. It's just a small segment of it. So when you folks start seeing signals like this on our screen, once you learn about them, then these become tradable signals. But since everybody likes to do things manually, these would have to be taken manually. All right. So that's something, again, to the point where Manny was saying, well, we're not, signal calling. So I'm not here signaling, like the computer will give us a signal because it's programmed that way. But even in our community, I'm not calling out, hey, there's a discount there. Hey, there's a discount there. You know, um, our members have learned to, with the education, learn to identify what those signals are and then incorporate them into their own trade plan. Right. So that doesn't mean that they're everybody's taking all the exact signals every single time. It's just, what is your trade plan? How does that fit in, to your trade plan? And so, when somebody sees signals saying, hey, did you take that signal? Well, all depends if it's part of your trade plan or not. So we're here to, demonstrate what our method is and the signals that we use, to identify, high quality structural trades. And we're not scalpers, as I mentioned earlier. So it's just something that, when you start seeing these signals more and more on the screen, it's not just all about the auto X. The auto X definitely helps quite a bit because it's very easy to miss a signal. Just go to the bathroom for 3 minutes and then come back and you missed the prime signal. So the AutoX can be, helpful in that regard. But there are many signals that, because I always get the questions, are those signals valid? Okay, that we're showing here on the screen, are they valid? Well, I'm not just going to say, yes, they're valid, or no, they're not valid. What I'm going to say, does that signal meet the criteria of that structure? And then again, that's where the education comes in that we provide. So once the student understands what that structure is and what the components of that structure is, how it's develops, then there's a level of confidence that should present itself, that's okay, yeah, that's a valid structure. So once you understand the structures, then you say, okay, what's the next step? Devise, a plan for tradable execution and management and so forth. So lots of signals happen. And what I like to say, in our community is each of these signals is mathematically exact. They're exactly the same signal mathematically. So I use the term quantitatively, they're the same. Qualitatively, which is more of, is they're not all the same. Some are higher quality than others. So part of the education is to describe, or is to be able to delineate, though they're all the same algorithmically, what's a better quality trade setup, versus another, right? So like, just to kind of show you, so like here, for instance, all right, in this condition right here, so this signal here, that is still a discount as this discount over here, okay, as the other ones I just showed. So that is a discount, but this is a low quality, right? Low quality discount, right? And again, as to the reasons why, is all goes into the education that we provide. But mathematically, it's the exact same discount as all the others, right? So, if part of using signal generating software or anything algorithmic, all right, or even your own, even if you don't have a computer that's generating signals, um, for your method, I mean, you need to have your own criteria. How am I entering a trade? What are the conditions am I entering the trade? What kind of, what would be triggering me into a trade? Things like that. So, all those things need to be, predefined. And then, as you're seeing trade action unfold or price action unfold, is your criteria being met for, a trade? So again, whether you're doing it 100% discretionary with no computer assistance, or you have some sort of computer assistance as we do, I mean, the process remains the same. All right. So, but again, these discounts, yes, they are valid. Yes, they are tradable. In this case, these two that I'm showing, but the other one there, same mathematically, but a much of poorer quality choice to have taken. So it's all part of what we try to convey to our community. And so, it's all evaluating. We know what the direction is. I mean, I think everybody's pretty clear on that, right? You know what the direction, what levels need to get taken out. We discuss those. Now, that's at that point, how do I get into that trade? Do I just, okay, it's long. Hey, he says it's long, so I'm just going to go buy them. No, that's not the case at all. That would be, unwise to do. We would want to wait for, a better price location. And again, that's where a lot of that waiting comes in that we were talking about earlier. So cool.
Yeah, that makes a lot of sense. And if anybody wants to know, like, so here you can see on this, what David was speaking of on the CCI ATA strategy, pretty much lets you know ahead of time where it would be executing, where it would be risk free, and where the stop is. Again, I can't It's not a trade recommendation. It's just transparency. You can see here on the center chart, this is the A10, and it would execute on a touch of this support line, right? I've got my little drawing tool that I like so much. So the A10 would be, if on a pullback to this level, if the conditions were correct, meaning that we got the conditions that were being pre-coded, it would then execute at this zone. So similar, very similar to how we all execute. This is the A4. It would be executing right here at this level, and so on. Just the way, I enter trades where if I get to my zone, I'm looking for a delta divergence. I'm looking to be, a buyer in low ticks, a seller in high ticks. I mean, that's basically my entry criteria. This ATA is just doing that really quickly based on some pre-coded conditions that obviously make a lot of sense.
Yeah, that's you're absolutely spot on there, Manny. With that ATA zone. I mean, this is kind of, from a structural standpoint. If prices were to pull back down into this, we already know what zones we're interested in advance. Okay, so so it becomes, I mean, again, what we don't know naturally is whether or not those zones, that is going to hold when it gets there. But again, at least we know, like I already know in advance every area that I'm interested in taking a trade. So there's no guessing. It's like, should I take one now? No, I don't have a spot right here at this moment. But I see if we get, a bit lower. Okay, so like on my left charts, right, there's an A4. Okay, and this is what we call A10. Okay, so I already know, that in this area, this level, what would be around the 30s plus or minus, there could be a potential trade opportunity there for me. It's not automatic necessarily, but I already know in advance, right? Um, and so you can see even over here this ATR, when it pulled back into that zone, it held. Again, anticipating that in advance, I'm already thinking if it pulls back into that area, I'm going to be looking for a potential long. Right. So, and again, that's the idea is, sometimes these, ATRs, obviously they shift, so prices will blast right through them and like they were never there. But we do have a pretty high recurrence rate of prices when they pull into these ATR zones. And these are our own, a lot of systems out there, a lot of platforms have embedded ATR lines, or ATR, they call them ATR stop zones, and they're just horrible the way they're structured. So we have our own that we designed, proprietary formula, and we refer to them as true structure zones. So they don't easily shift like many of the ones that are canned in many of these programs, even though they may be called an ATR stop level, they're just horrible. And the ATRs that we have here, I designed them from my days when I was at the investment banks as a market maker. And give you a short story of that. Many of the folks in my community already know this story, but some of you may not. But when I was in market maker in the investment banks, we were we threw what we wanted to do was management. What they wanted to do was develop kind of unique custom ways of improving our market making. Number one, to be obviously much more profitable, where we could trade larger size, for the institutional community and so forth. So come up with some interesting and kind of unique custom ways of using what's already out there, in the universe, the tradable universe, indicator universe. So, so what we ended up doing was taking, little slivers of paper. We would write, ATR, right? throw it in a hat, literally a baseball cap like Mike Manny's wearing, right? And then RSI, MACD, stochastic, ADX, DMI, all the various tools that everybody has available to them, right? So we threw that in the hat, and then crunched up the piece of paper and threw them in the hat, and so shuffled up the hat, and we picked out. So I drew in my group. I drew the ATR, and I said, "Oh, cool, average true range." Now I didn't know what we were going to do with it, but hey, I drew average true range, and everybody else, drew some of the other indicators. So basically, the idea was come up with some way of utilizing, in our case, the average true range to be able to use in market making, to become our market making, more efficient, certainly more profitable, and to be able to use it internally. Okay, so there was really no time limit necessarily, but they kind of pressed us, maybe 4 6 weeks. So what we would do is we would get together, my group, we would get together and say, okay, what's the average true range, the definition of it and how it's created, but how can we use it? So we came up with, some a kind of a formula where I mean, it's displayed on our screen as it is here, the way I'm derived it, but there are some components to the original one back in when I was at the investment bank days that we are not using here simply because of intellectual property issues and so forth. So I know exactly what they are, but I cannot necessarily use them directly. But easily enough, I'm able to emulate a lot of the functionality of how we used it. So how did we use it? So we would create a zone like we have here, a reference level ATR. And again, the ATRs that we used back then may not have been the ones we're using here exactly. Again, whether we're using them on a 5-minute chart or a 1-minute chart, or again, that ATR value changes for the particular chart that we use, but the concept is the same. And by the way, it's the ATR value on that specific chart. All right. So there's a daily ATR value, that the market, is has right now. And I think that's somewhere in the neighborhood of, I don't know, the 3-day ATR is like 177 points. That's a 3-day ATR, right? Well, that's not what we're using here, all right, on these. What we're using is we're using the ATR on that chart. So if you're using a 1-minute chart or a 5-minute chart, what's the average true range of a 5-minute chart or a 1-minute chart? And then we're calculating that in these zones. So the idea then is, we're not using the daily, but we're using a chart specific size. But the concept and the calculations are very similar. And so the idea there when we were market maker was, when prices move into these areas, and this is not just on the futures, this could be on an individual stock, Dell Computer, Google, and whatever. Okay. And when prices move into those average true range, so that's the distance of an average true range on that chart. And what they simply became was, for us, an area, and I'm going to tell you what we found out was kind of interesting, but which validates these areas even more for us back then. But our initial idea was if prices, pull back into this ATR zone, this is where we would, as market makers, be willing to commit more capital, become larger size. Hey, I'm a big buyer at, let's just use this ATR, 6622. I'm a large buyer at that level, et cetera, right? So we become much larger at those areas because that's the different, this, as we viewed it, it's the distance of an average true range on that particular size. So we would become bigger at that. And then what we ended up finding out, all these ATRs don't necessarily hold all the time. Market dynamics, can override those. But for the most part, when they pull back into these ATR zones, they acted actually as kind of a support or resistance zone, which was kind of interesting. What we found out, but more importantly, what we found out was that the institutional players, and we didn't know this by in our original design, but what we learned was the institutional, mutual funds, etc. They use ATRs hugely, right? And where most people didn't really, we at the time we didn't even realize to the extent. But what would happen is we would become, let's just say prices move into that area, and as a market maker, we would we would get long, okay, for the house account, right? Position ourselves, and then the idea was to attract institutional buyers, institutional customers. So what would we do? We would be buying into this area, right? This ATR 10 zone, say for instance, we'd be buying into this area, and we would get long. I don't know, maybe we'd get long, 500, 1,000, 2,000 contracts, whatever it is, And then what we would do is we would, within the context of that zone, we would go out as a large seller. So if the market starts moving up a little bit, or even if it didn't start moving up a little bit, we would go up as a large seller. Why would we would do that? Because we're not trading proprietarily from a standpoint of like what we do today for each of us. What we're doing is we're trying to attract customers, business. All right. And so we would go out as a large seller. Lo and behold, we would have enormous amount of response from the institutional community, various mutual funds and hedge funds and so forth. All right. How many you have for sale? All right, I'll buy 500 of those. Right. Or if we were trading, one of the stocks that I was trading at the time was Dell Computer. Dell Computer, we would be pulling into an ATR zone, and I'm getting long 100,000 or something, or 150,000 shares, and I'm going out. I'm a large seller of Dell Computer. I'll sell 250,000 in here, or whatever the case may be, or 100,000 or whatever, and we would be attracting institutional activity at those areas. So what's the takeaway on that? Well, it turned out that, and we didn't realize it, like I said, in the beginning of the development process, but we eventually refined it even more. But ultimately, what it turned out to be was that these ATR zones, um, is exactly where, or very close to where these institutional players want to also engage in trading, positioning and so forth. So it was kind of interesting, and it was something that we learned along the way. And so the ATRs really became kind of a mainstay with when I left the investment banks. And of course, we couldn't disclose that to anybody. It was something that was definitely internal. But when I left that side of the business and started doing this stuff on my own, developing this stuff. So I said, one of the ATR was one of the most successful tools that we had when I was a market maker. So kind of what we do here is, very similar. Is we want to act like a market maker, but since we don't have the capital, as market makers do, we want to emulate what market makers would be doing. So that's my approach. And so part of that approach is pulling back into an ATR. So like for instance, here you see on the main chart on the right hand side. So look at that. This is called an ATR 7. All right. So look at that price pulling back right into that ATR. So what would we be doing as a market maker at that point? I would be, as prices coming down, into that zone, I'd be buying them. I'd be standing there buying them as a market maker. Okay. And then, whether or not, if the market snapped right back up quickly, as a market maker, I'm long. Okay. So I would say, okay, I'm going to go out as a seller. So as this thing starts moving up, I'm a seller. So of course, buyers would start coming into me, institutional buyers, that is. They'd come by. How many you got for sale? All right. I don't know. I'll sell 50 here. I'll sell 100. I'll sell what I want to buy 25, whatever the case may be, whatever the number. And so we would be attracting, a lots of institutional activity because they're not at the time back then, they're not the ones, they had to go through the market makers. Today they can do all this stuff on their own, which they do many times, most often, right? An institutional mutual fund, they can do exactly what we're doing, and they do it, out there. But back then, they generally had to go through the institutional, rather the market making route. Okay, so but that's kind of the idea. So what we're doing here, how I've created these is very similar in the usage of them. I want to look to buy a pullback into those ATRs. Not all of them are going to work 100%, but they're going to work a large percentage of the time where that's all I care about is that a large percent of the time I'm going to be able to utilize them to a high level of confidence. And when prices pull into that level, boom, I want to buy those, right? And so that's kind of the history of the ATRs, and they've been a core mainstay of what we do, and the way we use them and the way we have them structured. I can pretty well say with high level of confidence nobody else has them like we have. Platforms do have ATRs, but they don't act like the way we designed. So, but the way I've created them is they emulate what we had when I was at the investment banks as a market maker, but they're not the same because I can't use the exact same formula. But you can get darn close because the ATR and MACD, DX, AM, ADX, DMI, and all the others. It's like in music, right? You can use all the same chords in a song. They could be the exact same, sequence of chords, but the in of one song versus another, and there's no plagiarizing because the chords are universal. It's the melody of the song that is protected. Okay, so you can have the exact same chords, use a different melody, and you're protected under patent rights. So it's kind of the same thing here. I'm using ATR. Yeah, I'm using the ATR. It's a 10 period ATR, standard ATR. Most of them use 14 periods, but we use a 10. So it's basically the same calculation. So it's kind of that's so when you start seeing these pullbacks to these lines, they're not just there for nice colors and lines everywhere, but they're very useful lines. And how the trader uses them, how we teach how to use them, and it's up to them how they eventually start integrating them into a plan. But so that's what those ATR lines are all about, for those that are interested. All right. I'm going to be heading out in a few minutes. I got to prep up for a meeting soon, and I will leave my charts up, Manny, for
Great.
everybody.
Yep. Thanks, David.
And I don't know how long you're staying online here for yourself, but I'm going to be leaving in just a few minutes. So hopefully everybody, got some good juju out of this morning, and
yeah, I'm gonna stick around until noon, and then I'm gonna log off. And what I'm hoping to do is come back on this afternoon if I get another task that I have to accomplish. If I get that done within enough time, I can jump back on and start. I want to review the clock a little bit. Hopefully, we'll get some decent price action. But we fell just shy. What? Let's see. 7 ticks shy of the target of the overnight high target. Price failed up here again. And just as a heads up, guys, so the trade setup that I posted in chat that you can see here on the screen. Oh, wait, that's not it. The continuation long here that I'm waiting for, 66.42 to 46. That's where I'm hanging out. So I drafted this level before the 845 high. And the reason why I'm saying that is because that's a level that it matters. And I think that if we can breach that level with strength and momentum, I think there are conditions. So I'm not sure if you guys remember, but yesterday I kind of highlighted that, hey, if we got above, shoot, I forgot what the level was, but I know I posted. It was an options level that I posted, and I said, hey, if we get above this level, we're going to squeeze. and we're gonna pop. And that's what happened kind of around that. Let's see, what time was it? It was on. I know it was news, right? I mean, it's always news, but let's see. Yesterday, yeah, that was about. Okay, yeah, so it was 64.9. Oh yeah, so 64.90. Let me just see. Let me make sure I get this right. March 31st. Look at yesterday's plan. Find the level. Okay. Yeah. So it was 64.88 to 93, right? So 64.88 to 93 kind of highlighted that, hey, if we can get above that level, we're going to see there's data in the book that suggests that, we're going to get a thrusty action. There's an air pocket above it. We're going to scoot higher because, like, as I said, what I'm always on the lookout for are those levels that matter in the book, and that once we get above those levels, market makers are forced to act, and they're going to squeeze, and they're going to be forced to buy futures. And I've spent a lot of time trying to get to that level, and that's why that level is not necessarily a resistance sell, because I think that. So I want to stay with the trend, and and it might get there, and they might chop it, or it might hit the level, fade a bit, but not completely sell off. And it did that today, right? There's no way to tell, but I've seen it act. I've seen that level trade. The continuation long is one of my favorite setups, because once you get above that level, prices will scoot really high, will scoot, and they tend to get me at least 10 points on them. And so that's really my goal. And so that level is really, I really put a lot of time into drafting that, coming up with that level on a daily basis. And so I've seen it happen before. I would rather be on the long side of that trade, because I know that that's going to have more forcing action. So over time, what I've noticed with that level, the reason why I don't draft it as a resistance sell is because what it will often happen is that level will trade and we'll fade, 5, 6, 7, maybe 10 points, and then price will just hang around by it. And maybe we'll chop up, 5 points above, 5 points below. But it's when we get above it with strength and momentum that level pays off huge. And so that's one of my favorite setups. You'll see me, you'll hear me call. It's always on my trade plan. I'm always trying to make sure that we're on the right side of that move. And given what we've seen today, right? So we have bullish context, right? The daily open, the print held, no attempt at a gap fill, right? The other condition that I want to highlight is that the read on Vega here is that volatility is being suppressed. The VIX is now down 5%, down $2 from the time I called it out. So volatility is not in demand. The daily open held. We're testing the hourly trend. If we can get above that level, I think it's worth 10 to 15 points. And so I want to be a part of that trade rather than, of course, in hindsight, if I would have sold it today, yeah, that would have been great. But what I know about those continuation long levels is that I'd rather be on the other side of it. The similar level on the short side on my daily plan is the breakdown short. So the breakdown short is a level I put on there every day. And if we get below that level, it's the opposite of what I just said on the long side. If we get below that level, it's not quite the opposite. So if we get below that level, what tends to happen is that on the long side, market makers will be forced to buy futures to neutralize the deltas. On the short side, what happens is that market makers will start going into a negative gamma. We're probably a negative gamma by the time we get there. And if we get below that level, they're going to go with the move. So they're not going to be buying futures. They're going to sell more. So if we're going on the upside, right, they're buying futures to neutralize their options deltas. The breakdown short, if we get below that level, they're going to sell futures, and that's when we get those quick zip moves that break down really quickly. And that's another level that's good for 10 to 20 points. So look out for those. Again, we have to break the level with strength and momentum. You'll know it when you see it. You know, if we hang out there too long, if we trade above it, come back below it, start chopping around for very long, you know, it's probably not going to work. Or maybe it will. Real-time reads are tough. But just know that those are the conditions under those two setup types. Two of my favorite setups. The breakdown short happens much less than the continuation long. But yeah, I hope that helps you guys out because that's one of my favorite setups. I've had, you know, my best trades have been off that level, off that setup. I once had a intraday 114 point trade, an intraday 114 point trade, and there were similar conditions. I also had another one that was, I remember I had a 79 pointer to offer that continuation long. So definitely want to be on the right side of that one. So what would get me long there is say that right now, what I would want to see is honestly here. I think what would be really good to see is if we do a look above and fail on the overnight high. Right. Let me just draw this out on the Thinkorswim chart because that's like the clearer look. So here on the Thinkorswim chart, so say we do a look above and fail, right? Or what's going to look like a look above and fail. We go up and then we come back down. Here, let me show. Now I got to show you on the volume profile chart. Hang on. Okay, so say that we look above the overnight high, which is right this the dotted black line. You probably can't see it, but you can see it here on the blue line on the right chart. So if we get above it, right, and then we pull back and we hold this, we break above it, and then we hold this we hold above this distribution right here. Right? Maybe probe down to here, form a higher low somewhere in here. But ideally, what I want to do is I want price to hold this distribution, right? Even if it comes down into, say we trade up and we come back down, but we come back into here and then wick and come out of here. I'm going to be, if that's the case, excuse the drawing, it's really bad, but I'm not a good artist. If we come back down here, wick, and then go, there will be a descending trend line here somewhere. And I'll be looking to get long. I won't wait even for the high over here. I'll wait for price to break that trend line. And then I'll probably be getting in somewhere like around here. Right. Look for a break of that trend line and then get in for a move higher. I'd be expecting us to break through with strength and momentum. And then look, you can also see here that the target on that becomes that naked point of control up here by 66.55. So hopefully I'm getting in around 66.40, and that gives me plenty of room for a 15-point target. All right. I hope that makes sense. If not, let me know. That's what I'm going to be looking for. All right, here we go. Did we trade the overnight high yet? Not yet. Gosh. 1 tick shy, 2 ticks shy. I have that contract still that I have it offered at 43.50, and it's like, oh my god, just fill me already. The reason why I think also that we will come back down in is what's today? It's today's S38. We're looking for that low here. Hang on. Yeah, center time is 12:30. So look out for a low pivot sometime between 11:40 and 12:50 with a center time of 12:30. Okay. I like that trade idea a lot. That's a similar trade to the one we had yesterday, guys, where we said we wanted to be long in the 11 o'clock hour. And that ended up being like the pullback low of the day. Boom, filled on that order. Nice. I think that trade makes a lot of sense, especially, like in an hour. So I'm actually going to log off here and give it some time. It's 12 o'clock. If that trade does execute, I'll jump back on. Yeah, I like that idea. Yep. Oh, way to claw some of it back, Madge. Good job, buddy. Yeah, this thing is going to bleed up. Look at the VIX. Keep an eye on the VIX here, guys. Wait for that pullback. We're going to get a pullback in the next hour. Look out for that setup line, guys. Continuation long above 66.42.46. We're above that now. $417 tick. This thing is going. Yeah, it's a straight bleed. Look at that. The VIX just straight down. SPX straight up. NQ, RTY, all of it confirming. Bonds are coming off. Oil is just still tough up there, man. That's not gonna. See what happens. See what happens. Staying long side focused for now. Good job, Madge. You're looking pretty right now. Make sure you take some profit. I'm always going to recommend that. That's just the prudent side of me, the prude in me. Good job flipping too, because I think you were short, right? Way to stay flexible. Way to stay flexible on that. Yeah, super bullish here. Yeah, I think so. I'm expecting somewhat of a slight pullback here shortly. And in fact, I'm going to log off now because I want to be able to trade that and I want to go run a quick errand and grab a bite to eat. I haven't had I don't have anything in my stomach. And I didn't have any dinner last night. I'm just looking at yeah. Good. I think that yep, there goes that. Oh, take it. Oh, yep. Let's see. If it holds right here. Yeah. Okay. Looks like it's gonna start. All right, guys. I'm gonna log off. I'll be back. I'll be back later on this afternoon. Let me just go grab a bite to eat and settle in, get some other work done. I hope we kept you on the right side. We'll be back at it tomorrow again with handle stats, and I'm hoping to come on in the afternoon. I have a task that I have to complete here. I want to get something to eat, and then hopefully we can start getting into the clock. But that being said, trade safe. I'll be lurking around here. Stay tuned. Bye bye.
Six.